Hello and welcome to today's episode where I will be explaining to you what is cost of goods sold, how you can calculate it, where you can find it, and why it's so important to monitor this figure in your restaurant. Okay, so before we move on, in the last episode we spoke about how to calculate your ideal plate cost. Okay, so ideally, how much is it costing you as a business to put that plate of food together for the customer? Well, in today's episode we will be looking at how to work out your actual cost. Okay, so in the last episode it was the ideal cost, and if you haven't watched that video, click up on the link above. And you can watch how to calculate your ideal plate cost. And then in today's episode we are looking at how to work out the actual food cost, and you can do that through calculating your cost of goods sales figure. So stick around to find out some more. So if you're new to the Accountant's Recipe, go ahead and subscribe to my YouTube channel and hit the bell button so I can notify you every time I'm uploading a video, which has been designed to help you better understand your restaurant finances and take more money home. Okay, so what is cost of goods sold figure? The cost of goods sold, also known as COGS, is the cost of food and drink to your business for any given period. Okay, so for example, let's say your business had sales of £10,000 last month, and also last month your business spent £5,000 on food and drink. So your cost of goods sales figure is £5,000. So what we're saying here is that it cost your business £5,000 last month to generate £10,000 worth of revenue. Now you might be thinking, well, I know how much I've spent on food and drink last month, and therefore I know what my COGS figure is. However, what you might not know is that you have to account for your closing inventory. So let's step back and take that example we spoke about earlier on. So last month your food and drink was £5,000. Okay, so your business spent £5,000 on food and drink last month, and you generated £10,000 worth of sales. However, you get to the end of the month and you do an inventory check and you see that you have £1,000 of stock left on hand. Okay, therefore the actual expense to you as a business for that month was your original £5,000 minus the £1,000 of stock that you have on hand, and therefore the net cost to your business was £4,000. Okay, so I know you're probably thinking, well, I've spent £5,000, why am I only showing an expense of £4,000? Well, that's because you haven't technically spent £5,000. You haven't incurred an expense of £5,000 to generate a revenue of £10,000. If we were to show £5,000 as a cost of food and drink, technically that would be incorrect and would give you a very different result when understanding how much cost you incurred to generate £10,000 worth of sales, because you're still holding that £1,000 on hand, and therefore you only incurred a cost of £4,000 to generate that £10,000 worth of revenue. So in cash flow terms, yes, you've spent £5,000, but when working out the true cost to your business to generate £10,000 worth of sales, then you didn't incur a cost of £5,000, you actually incurred a cost of £4,000, whilst you still got another £1,000 worth of food lying around waiting then to be sold to generate more revenue for your business. Okay, so I'm going to take you through a proper example of how to work out your COGS figure. So let's start off with Mr. Bob, who's opened up a new restaurant, and we're going to see how COGS works for his business during the first couple of months of trading. So in the first month, Bob had sales of £10,000, okay, and he purchased food and drink this month for £3,000. Okay, so he's gone to his local cash and carry and he's bought £3,000 worth of goods. And with these £3,000 of goods, he's gone ahead and started selling in his restaurant, and he's generated £10,000 of revenue. Okay, now when he's come to the end of the month, he's done a stock check and he has counted that he has £500 worth of stock on hand. Okay, so now when we're working out the cost of sales figure, the actual cost to Bob's business to generate £10,000 of revenue is £2,500. Okay, so Bob's restaurant incurred a cost of £2,500 in food and drink to generate a revenue of £10,000. Now, in the second month of trading, Bob's restaurant does sales of £12,000. Okay, so in the second month now, he's doing better and he's doing £12,000 worth of revenue. Well, now let's work out what his cost of sale should be. Now, in the second month, he's gone ahead to the local cash and carry and he's bought more food and drink, but this time he has spent £3,500 during the month. Okay, so £3,500 of goods bought from the local cash and carry. Now, when working out the cost of sale figure, the first thing we need to do is account for the opening stock. Okay, so like we said last month, Bob had closing stock of £500, and therefore in month 2 he would open up with £500 of stock on hand, right? And obviously £500 of stock on hand is not enough, so he's gone to the cash and carry and he's bought £3,500 worth of more food and drink. But then again, he repeats the same process at the end of month 2, where he does an inventory check to see how much food and drink he has left on hand, and this time he has calculated his inventory on hand to be £300. Okay, so we must minus that £300, and therefore his cost of sale has now become £3,700 for the month. And how you do that is by taking your opening stock, adding your purchases on, and removing your closing stock. Why? Because again, your closing stock is not an expense to the business because you still got it on hand. You have not sold it to generate part of that £12,000 of revenue. To generate that £12,000 of revenue, you have used your opening stock of £500, some of the purchasing of the £3,500, but you haven't used £300 worth of stock, so that needs to be removed. And the actual cost of sale to your business this month was £3,700, whereas last month it was £2,500. Okay, but this month you've generated £12,000 worth of revenue, and last month you have generated £10,000 worth of revenue. Okay, and the process continues like this, and in month 3 then your opening stock would be your closing stock for month 2. So month 3's opening stock would be £300. You would then add on your purchases minus your closing inventory, and then you would arrive at the actual cost of sale. Now at this point, what I would recommend you to do is take your cost of sales figure. Okay, so let's go back to month 1, your cost of sale figure being 2,500. I would take your cost of sale figure and divide it by your sales figure, okay, and multiply it by 100 to get to a percentage. So if we take 2,500 and divide it by £10,000, we arrive at a percentage of 25%. What does this mean? This means that for every pound of sale being generated in your restaurant, 25p of that £1 is associated with the cost of your food and drink. Okay, so for every pound that you are selling in the restaurant, 25p is allocated to the cost of food and drink, and then the balance of 75p will be used to cover the rest of your overheads. Okay, now if you take that same formula, cost of sales divided by sales multiplied by 100, and do it for month 2, you will see that you get a percentage of 31%. Now this is quite different from last month's 25%, and this is where this will give you room to have conversation and better understand what's happening in your business. Why are the percentages so different? Surely you should be looking around a similar figure of 25% every month. Maybe you've got too much wastage this month, or something is happening where the figure is quite far out. And it's very, very important for that reason that you stay and monitor this figure, and I will talk about why it's important to monitor your figure shortly. But for now, you need to understand how to calculate that figure and be comfortable in understanding what that figure is saying to you. Before I talk to you about why it's so important to monitor your COGS figure, let me tell you where you can actually find the COGS figure that your accountant might have prepared. If you look into the profit and loss account, you will be able to find your COGS figure sitting underneath your sales. Okay, so you get your sales, and then you get your cost of goods sold, and then the accounts go on in your profit and loss account. But that's really where you can find your actual cost of food and drink, by looking in your profit and loss account and looking at the line cost of goods sold. And using our previous example where Bob was holding that £300 stock on hand at the end of month 2, if you want to know how much stock you are holding at any given time, then look at your balance sheet, which is the other side of your accounts. And in your balance sheet, underneath your current assets, the assets your business is holding, you should be able to see a line for stock, and that is telling you how much stock the business was holding at the time that the balance sheet has been prepared for you. Okay, so monitoring your COGS figure is extremely important, right? Because without you monitoring this figure, or without you calculating an accurate COGS figure, then you will not be able to understand the true profitability of your business. So first and foremost, the benefit of working out an accurate COGS figure is to understand how much money is your business actually making. The second thing is that by working out your COGS figure, like I showed you previously, allows you then to work out a COGS percentage, which can then be used to compare to the other months. And comparing your COGS figure to the other months is very, very important, because you can then understand if it's consistent or if there's something going wrong. For example, like I said earlier on, you might have too much wastage. Is food gone missing? Might be some lemon and herb chicken wings that the accountant took. I don't know, might be something there. But you have to keep an eye on that figure to see how the business is performing in terms of its food cost. The third thing is, once you have a COGS percentage, you can then monitor it with your plate cost percentage. Now, if you didn't watch my last video, I explained how to calculate the plate cost percentage, your ideal cost plate percentage. So ideally, how much is it costing you to make that plate of food? Well, now you have the COGS percentage, you can compare the actual cost of food. And remember, while you don't expect the two figures to be the same, neither do you expect them to be very far apart. And if your cost plate percentage is showing, let's say 20%, and your actual food cost is showing 30%, well, then this is where you have a starting point for your discussion to understand, well, why is there such a big difference between what I thought I'm supposed to be making and what I am actually making in the business. The final reason I have for you today is why you should monitor your COGS figure is so you can work out your gross profit and your gross profit percentage. So your gross profit is the profit that you are making on the sale of food and drink. And if you'd like a better understanding of how gross profit works and how to calculate this, and why, again, this figure is also important for you to monitor on a regular basis, then please do subscribe to my YouTube channel. Next week I will be talking about how gross profit works and why you should monitor that figure as well in your business. So now I hope you have a better understanding of what COGS is and how it's calculated. Here at The Accountant's Recipe, what we do is we help you work out what your ideal plate cost should be, and then we monitor this with your actual results using real-time data. And where we identify that you are spending above your target, we then jump in, identify where the problems are, and work with you in building solutions to keep them costs low, which ultimately means you take more profit home. So if you found this video useful, go ahead, please hit the like button so YouTube can do its thing. And if you'd like to get in touch, please feel free to do so. Our phone number and website is in the description details below. Go ahead as well, leave me a comment, let me know what you're thinking. Let me know if you found this video useful, whether you monitor your COGS figure on a regular basis, and what challenges do you face in your restaurant. Until next week, thank you, take care, bye bye.